Hello there! Your uranium miners are 15% down since early February. And after quite a bit of excitement all through 2023, uranium traders are getting somewhat anxious. With all of that happening in the market, let's have a look at more details. By the way, for the best uranium report on the internet, join us at myfinanceteacher.org. We have these uranium reports coming out nearly every month, and the next one is going to be out in another 1 or 2 weeks. While there's a lot of valuable data in those uranium reports, for now, let's have a look at some technicals on uranium and uranium miners. Starting with uranium price itself, we do look for uranium cycles, and usually these cycles last for around half a year. The average has been about 150 days since the middle of 2019. But of course, the cycles can be pretty short at 91 days or pretty long all the way up to 249 days. And usually the way you identify these uranium cycles is at the cycle lows, where they cross the 50-day moving average, preferably for over a week. RSI drops significantly, well over 20 points, and slices through the neutral level at 50. And at each of these cycle lows, we do have pokes below the Bollinger Bands. Zooming in a little, over the last year and a half, we've seen a few short cycles, and it's quite common for short cycles to be followed by a longer cycle to bring this average duration back to the typical half a year or so. So it looks like the ongoing cycle is already 238 days long. And while we have seen cycles longer than this, the fact that it's already so long, accompanied by the pokes below the Bollinger Bands, as well as RSI reaching all the way down into oversold at 29 right now, means that the cycle is probably pretty close to its end, meaning that we are pretty close to the cycle low. Nevertheless, there are no short-term guarantees if a new cycle starts anytime soon. After quite a bit of excitement in uranium, perhaps the market might need to digest some of those gains for a bit longer, perhaps with a bit of a sideways consolidation. But in the longer term, again, as I often mention in these uranium reports, investing over the longer term in uranium is still going to be outstandingly profitable, despite the rally that we have already seen back in 2021 and last year, unless, of course, a nuclear disaster such as Fukushima happens again. Naturally, we hope it doesn't. Moving on to uranium miners, this is URA. At the recent lows, RSI reached all the way down to 33.8. It's not into oversold area yet, but it's been the lowest since March last year. So that's basically the lowest in nearly a year. One possible scenario for the producers is perhaps one more swoosh down to scare the investors. That 200-day moving average looks like a very attractive target to test. That would also give you a bit of a lower low versus perhaps a higher low on RSI, which is called a positive divergence, and it usually precedes a rally into a next cycle. And a rally there will be, as the short-term market sentiment is already pretty low. That's despite all of this excitement all through last year. One way of looking at market sentiment is the ratio of producers to the uranium price itself. And while historically this ratio has been very high back in the early 2010s, over the last 10 years, when reaching into this red area at around 0.7, has indicated that taking some profits on the producers wasn't a bad idea. Again, that's over the last 10 years. Conversely, reaching into this green or even blue area that's somewhere at around 0.3, all the way since 2015, has signaled 3 or 5 times that a bit of buying opportunity had been coming up in uranium producers. And what do you say? Right now, this ratio is just at about 0.3 again. We see that there's a bit of a bounce developing over the last several days. As I mentioned, even if the producers do dip a little over the next few days, we are pretty close to the next rally. Next, moving on from uranium producers versus uranium price, let's have a look at, again, uranium producers versus the general stock market, SP500. And while historically this ratio has been significantly higher, let's just have a look at the last, say, 9 years. While the general stock market is close to its historic highs, Nvidia, for example, is quite expensive lately, outperformance of uranium miners through 2021 has slowed down in the last year or two. I see this again as a sideways consolidation before the eventual push higher, perhaps in the longer term. So to sum up the video into 10 seconds, looking at the weekly chart of uranium miners, yes, we are now in the cool down period, perhaps coming down to that 200-day moving average, which in this case is pretty close to the 50-week moving average. But in the longer term, uranium miners still have quite a lot of potential on the upside. That's looking at the last 10 to 13 years. Zooming in a little, looking over the last couple of years, you might recognize a bit of a cup and handle formation. With a measured target equal to the depth of this cup, we apply the measure to the breakout from the handle wherever it comes. If in the short term producers continue to decline a little towards that 200-week moving average and break out somewhere around $26, $27, a good target for these uranium producers would be close to that round number of $40. Wouldn't that be nice? If you want URA to reach $40 by early 2025, you gotta hit the like button down below and share this video with your friends. Have a wonderful Wednesday. Bye bye.